So what's the difference between gross profit and operating income? Gross profit is the company's net sales minus its cost of goods sold. So it's the profit after the cost of manufacturing or purchasing the product. If the company is a manufacturer, then cost of goods sold will be the cost of manufacturing the product. If the company's a retailer, however, cost of goods sold will reflect the cost of buying the product from a manufacturer. Now notice it says net sales instead of sales. You always want to use net sales to calculate gross profit because net sales has deducted sales discounts, sales returns and allowances, okay? So you want net sales minus cost of goods sold, that's your gross profit. Operating income is also net sales minus cost of goods sold, but you subtract one additional thing. Operating expenses. What's included in operating expenses? Things like SG&A expense, research and development. Sometimes you'll see impairments in there. Okay, so operating income is the company's profit after accounting for the cost of manufacturing or buying the product and the operating expenses. And sometimes you will hear people call operating income EBIT, earnings before interest and taxes. Now, sometimes that's accurate, but sometimes EBIT and operating income are not the same thing. An example of when they would not be the same thing is if the company had some non-operating revenue or non-operating expenses other than interest. For example, if the company had like a gain on the disposal of a fixed asset. In that case, operating income and earnings before interest and taxes would not be the same number. Let's look at an actual set of income statements here. So we've got the company Home Depot, and we've got 3 income statements, but we'll just focus on fiscal year 2020, and we'll look at the gross profit and the operating income for Home Depot. So it's all nice and set here. They've got net sales here right at the top, $132.11 billion for 2020, and these amounts are in millions. That's why I said billions. Okay. Then we subtract the cost of goods sold. They call it cost of sales, but it's the same thing. So you take the 132 billion of net sales, subtract the 87 billion of cost of sales, and you end up with a gross profit of just shy of $45 billion. Then you take out the operating expenses. What operating expenses does Home Depot have? They've got SG&A, which largely consists of salaries. They've got depreciation and amortization expense, and then they've got an impairment loss. Okay, so when you deduct those operating expenses, it's $26.5 billion roughly of operating expenses. You subtract that from the gross profit, you get the operating income for Home Depot, which is just over $18 billion.